Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. And we are into the midweek of this trading session and looks like we are off to a positive start as suggested by the trends in the GIFT Nifty. Nifty has started this week on a positive note and we have closed both the days of the week in the green. So today we will watch out if Nifty can mount above that 25,800 mark, because yesterday we did see Nifty closing above that 25,600 mark as well. But yes, as of now, global cues that stand mixed. At this stage, US markets have ended mixed overnight as investors looked for ending of the federal government shutdown after days of stalemate. Now that the spending bill has been passed from the Senate to the House, which is the lower chamber of the Congress, we could get the results as early as today. But yes, we'll be watching out for these developments as well. But yes, from the US markets front, we did see Dow hitting that fresh record high, but Nasdaq struggled given that investors rotated out of tech stocks. But yes, coming back to Asian markets, that meanwhile was largely positive, with Australia and Hong Kong markets starting in the green, but Japanese and Korean markets saw some weakness this morning. But yes, for our own markets, we are in the last leg of the earnings season, so we will be watching out for those developments that is coming in from the September quarter. We have results like Tata Steel and Asian Paints, which will be reporting its second quarter performance. We'll also be having post-results reaction from companies like Max Financial, Biocon and others. So we'll understand from our experts how you should be positioned on these names, and also we'll be taking your stock related queries. So keep posting them on our live feed and we'll get to them in a bit. And now let's take a quick check of the top headlines, Sisa. Stocks on Wall Street end mixed. The Dow closes at a record high, gaining nearly 600 points as government shutdown nears its end. The Nasdaq recovers from day's lows but slips below the flat line as investors rotate out of tech stocks. The Asian markets are mostly higher. Meanwhile, the GIFT Nifty is indicating a positive start for our own markets. And in key results, Tata Steel is likely to see modest rise in revenue as it reports numbers today, while a weak quarter is expected from Asian Paints due to heavy monsoon and increased sales costs. Tata Trust has named Neville Tata and Bhaskar Bhatt as the new trustees inducted to the board of Sir Dorabji Tata Trust for a 3-year period. The board of trustees have also revised Venu Srinivasan's tenure from a lifetime to 3 years to comply with the Maharashtra government ordinance. The union government has invoked an anti-terror law after a car blast near Delhi's Red Fort metro station killed at least 12 people. The Home Ministry transfers the probe to NIA, India's principal counter-terror agency. Reports have suggested that the suspect may have acted out of panic due to raids carried out by security agencies, and the bomb was premature and not fully developed, and thereby it limited the impact. And a record voter turnout in Bihar as 122 seats across 20 districts went into poll in the final phase of assembly elections yesterday. The News 18 exit poll gives NDA the clear edge as votes will be counted on Friday. All right, we did see that Nifty did rebound sharply from the yesterday's day's low to end near the session high. And of course, it closed above that 25,600 mark as well and has recovered most of the last week's losses as well with about 121 points gain as well. But yes, positive global cues lifted the market sentiment yesterday. We'll watch out how today the global cues will lift the market sentiment today as well. 40 out of 50 Nifty stocks closed higher in yesterday's trading session, and among the sectoral movers, IT, auto and metal stocks, they were some of the lead gainers as well. But yes, on the other hand, what did not do well in yesterday's market was realty stocks and the PSU banks, which continued to cool off in the yesterday's trading session. But coming to the broader end of the markets, midcap index did hit a record high, but small cap index slipped marginally and ended in the red in yesterday's trading session. But yes, like I was pointing out, Asian Paints and Tata Steel, some of the key numbers which will be reported today from the September quarter, and Hindustan Aeronautics will also be reporting its second quarter results. But coming to the cash flows positions of where we stand, FIIs, they stood as net sellers, sold stocks which was worth about 500 crore rupees in the cash markets. DIIs, they were the buyers, bought stocks which was worth about nearly 2,000 crore rupees in the cash markets. Coming to the option cues data, Nifty put call ratio climbing to about 1.08 from 0.99 levels, and the stock that continues to be a part of the F&O ban, that is your sale. So yes, as of now, this is the main cues that will set the tone of the trade for today. And as of now, if you look at the pre-open rates, Sensex is up by about 300 points. Nifty is also doing well above that 25,800 mark as of now. But with that, let's quickly get on board with the technical export of the show. Joining me is Jay Thakkar, Head Derivatives and Quant Research of ICICI Securities, joining us. Jay, good morning. I mean, we've seen resilience for Nifty from the past 2 days, but the breadth has remained weak. So what are the levels you're watching out for today, and what strategy would you suggest investors to adopt?
Very good morning to you, Lovisha. And it's going to be a very interesting week and a very important week, particularly because of the exit poll results which we had yesterday evening, and then we have the final outcome on the Friday. So domestically, definitely, as you said, that we are in the last leg of the result season, so that almost is that more or less. But then what you have is the state election, which is obviously crucial always. And whether you are in full majority or whether the central government is in full majority or not. Um, it is sentimentally important, and particularly now this time around, I think that since BJP is not in, I would say, a full majority in the center, hence, and the Bihar election definitely becomes important to my mind. And what we've seen is that volatility, Lovisha, has bounced back earlier from 10 levels to 12.5 levels, and that happened due to short covering. Now, what happened is when Nifty was at around 24,500 at that point of time, almost you had 2 lakh kind of contracts short by the FIs in the index futures. Thereafter, we saw Nifty bouncing back from 24,500 to 26,100. That 1,000, 1,500 or 1,600 points kind of a rally was on account of short covering, wherein the FI net shorts had come down from 2 lakh contracts to almost 92,000 contracts, right? And because of that quick short covering, you saw that volatility bouncing back from 10 levels to 12.5 levels. So I basically relate volatility bounce initially to or with to the short covering. But then what has happened is now slowly and gradually it's consolidating and it's inching towards the upper end of the range. And it's also inching towards 12.9 and hinting to break out above those levels. Obviously, you have the event, so the weeks can always go up. But now this time around, what has happened is the fall which has come from 26,100 to 25,300 recently, which we saw until last Friday, was a kind of short build-up wherein the FI net shorts have gone up from 92,000 contract to almost 1.6 lakh contracts, right? So that has become because of short build-up again. So if you have a very positive result out there, then the volatility might cool off and market is inching towards life high. Any issue there, and as far as election outcome is concerned, will restrict Nifty to 26,000 100 levels and restrict it to make a lifetime high. But if the results are positive, I think the possibility of a lifetime high is quite high.
Okay, possibility of a lifetime high could be on the charts then, Jay. That's a positive thing that is coming in. But yes, yesterday we did see Bank Nifty index had underperformed the benchmark index. Of course, it's, key for Nifty itself to hit all-time highs. But how would you suggest the Bank Nifty trends to pan out?
Well, see, Ramesh, I would say that Bank Nifty so far, because of Bank Nifty, I am more positive on Nifty. Because that has been an outperformer that had hit a lifetime high. In fact, the financials because of the Bajaj twins, Bajaj Finance and Finance was in under pressure, and it took over recovered by the end of the trading session, despite the Bajaj twins didn't recover much, and they hold a significant kind of weightage in the Nifty financial services or maybe financial services put together, right? So far, what was happening, Lavisha, is that Nifty Financials X Banks was making good lifetime highs. That is the particular index. Within the banking pack, what we have seen is that it has outperformed the Nifty. It made a lifetime high again. It did not even fall much. It recovered well. In fact, it's holding 58,000 to 58,000 levels quite well, wherein we have seen significant put additions as well. PSU Bank particularly has outperformed the private sector banks, right? Uh, and I continue to do so. But I think from here on, if Bank Nifty has to inch higher towards the 60,000 levels, then private sector participation or private sector banks participation rather has to come back. And which is very much possible because more or less consolidation or correction seems to be over there. Bank Nifty is positive, and because of which I am positive on Nifty, and there is a possibility of a lifetime high. Lovisha. Otherwise, if you say, apart from banking, which are the other sectors, then Nifty Auto, Nifty Metal, these are the two other sectors which combinedly have around, say, 10% kind of a weightage in the index, looks positive. FMCG, Pharma holding around 14% of a weightage in the index. I'm looking positive to neutral from these levels, not contributing much. Construction materials and all of that are not looking that great. So we can say that yes, auto, metal, banking, these are the three sectors which are clearly in an uptrend, and you've seen long build up here. That is quite positive.
Okay, okay. What about IT stocks, Jay? I mean, from the past 2 days, they have been also performing well. So, can the trend continue?
Hopefully, I mean, I do expect that to happen. If that happens, then it would be really supportive for the Nifty to go up. It still holds around 9.5 to 10% kind of a weightage in the index, and significant after, I would say. I mean, oil and gas and IT, these are the two more important sectors within oil and gas, which I mentioned, forgot to mention earlier, along with metals and auto. This is also one sector which is in a clear uptrend, whether you say Reliance or whether you say OMCs, all marketing companies. Gas distribution companies are not doing that great, maybe ONGC, IGL, GAIL, and all of that. So it's mixed, but then OMCs and Reliance are significantly performing quite well, and they hold a significant weightage in the Nifty oil and gas sector as well. So that is been supportive as well. But IT, you have huge short of valuation, and that is the sector I would say wherein you have huge shorts by the FIs. They're quite negative out there. It's been quite, it's not falling much from the current levels. And if that bounce back, if that shows a sign of short covering Nifty IT, then I think the rally towards 26,000 will be very swift. And I'm hoping so. I mean, I just hope so because they are quite oversold. So bounce back cannot be ruled out at least. The medium to long term probably can be down until you have clarification from the H1B, from the trade deals and all of that. But the short term looks quite oversold. So a short covering or a bounce back when the markets are positive cannot be ruled out in IT. And that could be one sector, Lovisha, which could help Nifty to quickly inch towards 26,300 because you have huge shorts there. So if Nifty has to see short covering sectorally, this is one such sector.
Okay, okay. But Jay, anything that you're liking from this IT pack? I mean, I know that mid caps have been one of the street's choice, but from the large cap space, anything that you are liking at the current levels?
LTI entry from the mid caps and TCS from the bounce back. Huge shorts, quite oversold. TCS cannot be ruled out from bounce back for at least 8 to 10%.
Okay, all right, all right. Those are the stocks that we need to watch out for. All right, let's address now the first trades that's coming on your screen. 0.5% gain coming in for the Nifty. We've opened it in a quite the positive territory. 100 points gain coming in for Nifty, and we are above that 25,800 mark that we were aiming for this morning as well. If you look at the Sensex, that has also opened well in the green, and it's looking like a 400 points gain for the Sensex as well. 0.5% gain coming in for the headline index as well. Now let's take a look at Nifty Midcap Index. 0.5% gain coming in for there as well. Nearly a 0.4% gain coming in for the Nifty Midcap Index as well. And Bank Nifty also showcasing a gain of more than 0.5% as of now. So yes, all in all, if you look at small caps after yesterday's decline, it has opened up strongly in a 0.4% gain as of now. And if you look at the majority of the sectoral indices have also opened in the green. But yes, what is doing well in this market? Yesterday, Nifty IT Index was one of the top sectoral performers. Today also it's doing well with about 0.5% gain. Nifty Auto Index also extending yesterday's gain to the second consecutive day. 0.3% gain coming in for the Nifty Auto Pack. Nifty Realty also doing well with about 0.2% gain. So all in all, it's a broad-based buying which is observed in the markets. And after the breadth of the markets remained weak for the past 2 days, it looks like the advances have taken an upper hand in today's trading session. But yes, let's take a look at some of the top Nifty gainers and losers then. If you look at Max Health, that has been doing well with about 2% gains. Bajaj Twins recovering from yesterday's loss, some buying interest and some pullback seen in both of these counters, exhibiting gains of about 1% as of now. Eternal also doing well. Reliance Industries leading the charge with about 1% gain. So yes, we are seeing the index heavyweight also doing well as of now. TCS and ONGC, some of the other gainers on the Nifty 50 as well. But yes, on the losing front, you can see Maruti seeing a decline of about 0.1%. JSW Steel not doing well with about 0.2% cut. Trent also showcasing a cut of about 0.1%. Bajaj Auto and Nestle, some of the other losers on the Nifty 50 as of now. But yes, it looks like the breadth of the markets has been positive, and so far we have started the trade on a positive territory. But yes, let's address some of the stock reaction post the results. We'll first talk about Landmark Cars. The stock is not doing well after its second quarter performance. We did see, however, that the company reported a net profit of about 1 crore rupees from a loss of last year, and revenue has also grown by about 33.5% on a year-on-year basis. EBITDA has also grown by about 5%, but margins have narrowed in the second quarter, and that could be the reason why the markets have not been appreciating the results. But yes, coming back to you, Jay, the stock has done well in the past 1 month, but yes, today we can see a decline of about 110, nearly a percent or so.
The landmark definitely, I would say first of all, it's the non-FNO stock, and I mainly track the FNO stocks, but I do quantitatively track the non-FNO segment and at a space from the quant perspective. And looking at that, it seems that, see, in the near term, 575 is a critical support for the stock, and 575 holds, there is a possibility of this stock inching towards the levels of 640 as well, 640 in the near term. But if 575 raise, then I fear of the trend being negative or consolidating one. So till 575 levels are held, Lovisha, I would say that yes, 640 looks quite likely. So we can buy on dips around say 590 if at all there is a good opportunity, so that the risk reward will be favorable on the buy side.
Okay, all right. That's a view coming in for Landmark Cars. Let's also address one of the top Nifty losers. However, it has inched back in the green as of now. That is your Trent. In the past 3 days, we have seen the stocks witnessing a decline of about 6% itself. But yes, Jay, what would you suggest investors to do at this point of time for Trent? I mean, the stock has been depressed after its second quarter performance once again.
Of course, and this is one stock which has significant shorts as well, which I would say from a derivative perspective, good shorts, and the trend still looks negative. I'm very much negative on this stock. It's just that it has broken its previous support of 4,500 just in yesterday's trading session, and now going forward till 45, 4,600 levels are not reclaimed, or the stock doesn't close above 4,600 levels. The possibility of weakness is there. And the next support on the lower side directly comes to the levels of, say, 3,800 to 3,900. So that is the downside risk which we can see, but the trend is down. See, any bounce back, should also be as a selling opportunity only. I understand that it could be quite oversold. People might be thinking that the stock is almost like become half from the highs, but then it was costly also, and we still have shorts out here, so there is no such sign of long build up. If we don't have that evidence from the technical or derivative perspective, or we come from a bond perspective, I would not recommend anyone from at least initiating fresh longs.
Okay. Not initiating fresh longs for Trent as of now then. That's the view. Let's move on and talk about Max Financial Services. The stock has been doing well after its second quarter performance. The net profit, however, has declined by about 96% on a year-on-year basis. Net interest income has grown by about 14% on a year-on-year basis. And however, brokerages have remained positive on the counter. Jefferies has given out a buy call. They believe that the company has reported VNB growth at about 25% on a year-on-year basis, which was driven by about 180 points basis expansion of margins as well. They believe that the better product mix and positive yield curve has lifted the margin, and EV has grown by about 15% on a year-on-year basis. And GST changes will affect margin, but the company is well placed to manage it in the upcoming quarters as well. But yes, coming back to you, Jay, the stock is doing well, 2% gains, and this year the stock has been on a stellar uptrend. Can we expect this to continue then?
Yes, I think the 1640 levels are held on the spot. There is a high possibility that the stock inches towards the levels of, say, 2000 going forward. And there has been a good consolidation of almost from 1415 to 1650. There is 200 points. So from 200 points from 1700, that comes to 1900. So if not 2000, 1900 definitely looks on top.
Okay, all right. That's the view coming in Max Financial. Let's take some of the viewer queries then. We have the first query coming in from Naveen. He's asking the view on how car trade looks like at the current juncture. Jay, coming to you, car trade, of course, from so far this year, the stock has been on a structural uptrend, and right now it's trading at about 3,000 levels. What would you suggest investors to do?
Carter has seen a very good run-up. I mean, who would have thought of this kind of a run-up? I mean, significant run-up. I would say post-IPO, we saw this stock correcting and not delivering returns, but thereafter, the kind of recovery the stock has seen, phenomenal, I would say. Very good recovery. In fact, double from the IPO price as well. Looks little overbought. If at all there is a dip, one can be utilized as a buying opportunity for sure.
Okay, all right. Let's take another viewer query. We have Satya who's been asking the view on United Spirits, whether fresh longs could be initiated in here. Jay, what would your view be? I mean, of course, we've seen that the stock did see some volatile moves, but in the past 1 month, the stock has done relatively well.
I think till 1375 levels are held, you can see some further up move in United States, at least till the levels of 1500, 1520. There has been huge shorts there. As a disclaimer, I would say that we have recommended this to our clients from the perspective of short covering. We did advise to book profits also because we saw around 7 to 8% kind of returns within a day or two from our recommendation. We were expecting a short covering that has happened. It can further continue as well until unless the market is in an uptrend. And on the downside, as I said, 1360, 75 range is a very critical support till those levels are held. Bounce back till 15, 1520 cannot be ruled out.
Okay, all right. That's the view coming in for United Spirits as well. Let's take another viewer query then. We have Preeti Singh who's been asking the view on Bharti Airtel for a short-term investment, and is it a good investment at the current levels? Of course, Jay, we have seen the stock run up quite a bit this year itself, and in the past 1 month also the stock has seen about 5% gains. Would you advise would you advise investors to go for a fresh entry at the current levels?
The stock has gone up quite a lot, and we all know that. And that's the only option which we people had in the telecom, apart from Indus Tower and Idea. So the money was also chasing this stock, and due to which you can see the weightage of the stock has also gone up to almost like 4.5, 5% in the index, in Nifty again, huge, right? Uh, so all those things are done from short-term point of view. I would say there are better momentum stocks you can be into rather than Bharti Airtel. I don't see a downside risk, but then the upside potential also looks relatively better in other stocks.
Okay, all right. That's the view coming in for Bharti Airtel. Let's address another viewer query. We have Nana Prakasham who's been asking the view on HEG on how the stock looks like. Yesterday, we did see that the company reported a good set of results both from the top line and bottom line front as well. But yes, in the past 1 month, the stock has fairly been range bound. But yes, Jay, what would your suggestion be for HEG?
Quantitatively, again, looking at this, then this stock has relatively underperformed the markets and has been consolidating within a range, whether it is HEG or graphite. So I would say that the corrections or the dip should be utilized as a buying opportunity. I don't know when the breakout will come. And the breakout is yet to come in this stock, and the breakout level is above the levels of 625, 650, which is far from the current market price, right? 20, 25%. Thereafter, you see a breakout. So momentum wise, you may not get that kind of momentum if you're expecting them. All those 650 and all, when this stock could be in the lifetime, as I said. But then if you want really for the 2, 3 years kind of perspective, good. But if 2, 3 months perspective, wait for the breakout for the momentum to actually get back into the stock.
Okay, all right. That's the view coming in for the counter as well. Let's take another viewer query. We have Preeti Singh who's been asking the view on Bajaj Finance and whether it is a right time to enter. Of course, Jay, we did see yesterday the stock was sharply down on the back of its second quarter results. And of course, the company lowered its ARM growth guidance as well, which is why the street was quite nervous with Bajaj Finance. But what would you advise? Is it a right time to enter at the current levels or just hold on and wait for more?
I think avoid. I mean, this kind of a results, probably until next result, the stock may not do anything. It may give you, or it may recover from wherever it has fallen. That is the max you can expect. Because the selling pressure is what you see at the high levels, right? Post the results. If people are getting better opportunity, then you'll be seeing sectoral rotation within the stock rotation within the sectors, and all of that would happen, right? So my sense is that from a trading point of view, at least for the next couple of weeks, this is not a stock to be. It's not in a clear uptrend. The trend with yesterday's move seems to have been reversed.
Okay, all right. A clear avoid for Bajaj Finance as of now. Then let's take another viewer query. We have Contact who's been asking the view on Bosch after yesterday's results. The stock is fairly right now quite flattish in the trade at this point of time, but flat with a negative bias. and it has been consolidating at a higher range as of now. But yes, from a results front, we did see that the revenue grew about 9% on a year-on-year basis, EBITDA grew about by 10% on a year-on-year basis, and net profit has grown very modestly by about 3% on a year-on-year basis. Bosch, what would your suggestion be, Jay? Today the stock is not quite impressed, nearly a percent downtick coming in for Bosch.
See, it can recover a bit. I mean, it's a phenomenal company, always delivering good returns for its investors or maybe even the traders. But recently, we have seen a trend reversal happening. Any rise should be utilized as a selling opportunity. I think going forward, the stock can correct at least until the levels of 33,000 is what I'm expecting. 33, 32,000 would be again a good level to review to enter again fresh longs.
Okay, all right. That's the view coming in for Bosch. Then let's take another viewer query. We have Jagdish Prasad, who's been asking the view on Tata Elxsi and whether it is okay for an entry at this current level. Tata Elxsi, we've seen a sharp fall, of course, the entire IT pack itself. But what is your view on the counter, Jay, for Tata Elxsi? Any levels that we need to watch out from here?
I think the level to watch out is 50,200. If 50,200 levels are held, Lovisha, it can bounce back till 5,600, at least 56, 56, 50, and above that's 5,800 as well. So IT, as I said, is quite oversold. We have seen a lot of shorts out there. So just from the short covering perspective, that would be enough. Move 5,200 is a crucial support.
Okay, all right. Tata Elxsi, that's the view. Let's address one particular stock, that is your Adani Enterprises, because yesterday we did see that the company disclosed details of its 25,000 crore rupees rights issue. The company will be issuing about 13 crore rupees paid up shares with a face value of about 1 rupee, and the right issue is priced to about 1,800 rupees, which is at a discount of 24% from the current levels as well. But yes, Jay, how would you suggest existing investors to approach it, Adani Enterprises?
See, Adani Enterprise or maybe any Adani stock recently have not delivered good returns. In fact, they have been into consolidation only. So I would say that avoid Adani as of now in the short term. I mean, I don't see a move until it takes off the levels of 2,700. It's been consolidating between 27 to 28, 2,200. Now that's 500 points a range. That's pretty big. I mean, that's 20% kind of a range. Obviously, whenever it breaks out, it will provide you that kind of 20% returns in the stock. But once it provides a breakout, we will enter. About 2,700, it can go to say 3,100, and below 2,200, I fear it can fall to 1,800. So now within this range, it's difficult to basically call out that where the breakout is likely. Although you have seen the shorts getting covered, then all the positive coming back into the news as far as the stock is concerned, maybe from the external research companies out of India or maybe internally the regulators, all of them are given the clean sheet and everything seems to be over. But stock specifically is failing to deliver returns, at least since past 1 year. It's been trading within this range.
Okay, all right. Adani Enterprises, that's a view coming in for Adani Enterprises. Let's move on and talk about another viewer query. We have Alex, who's been asking the view of Concor on the back of results and whether it's a good time to enter this particular counter. Concor, Jay, of course, we've seen that the company did report a modest set of second quarter performance. Revenue and top line and bottom line, both of them saw a very low single digit growth, and EBITDA profits also narrowed from a year on year basis. But yes, Concor, what would your view be? I mean, the stock has been fairly range bound.
See, the stock has seen huge correction from 1,200 levels, more than 50%. Now it's below 600. 50% is 600. It's at 530 right now. More than 50% kind of a fall which we have seen in Concor. We have seen huge shorts also there. You were expecting that. I was saying a disclaimer, like you were expecting a short covering in United States. We were expecting Concor also. That didn't happen. Unfortunately, a few went wrong there. We haven't seen short covering yet, but there are huge shorts there. So any point of time, a short covering cannot be ruled out here. So this is not a stock wherein I would now suggest after being that oversold, being that into oversold region to initiate a fresh shorts here. The trend is down, but a short covering cannot be ruled out. Support nearby, I don't see anywhere much. It had huge support around the levels of 550 only, which it broke. It was kind of a shock, but then since it has broken that, so I would say that it will find a hurdle there first at 550, and then if it manages to surpass those levels, it can inch towards 595, 600. That is the max time working out for end of now, but yeah, bounce back cannot be ruled out. Because this is one of the stocks wherein you have huge shorts.
Okay, all right. That's a view for Concord then. Let's move on and talk about another viewer query. Satvika has been asking the view on BMW Industries on how the counter looks like. Of course, Jay, the trend has been quite negative so far this year. Right now, it's also trading at a very lower range. But what would your suggestion be? I mean, is it time to exit this particular counter?
Sona BLW is what you said?
BMW Industries.
Okay, I'm not tracking much of this because it's a non-FNO space and this is one stock which I'm not tracking actively, so I will not be able to comment
Okay.
much.
Okay, all right. Let's move on to another viewer query then. We have RP Kar who's been asking the view on auto stocks, specifically M&M, and she's asking whether or not she should ride the momentum at the current levels. What would your suggestion be, and any other stock would you prefer from the auto pack?
See, as a disclaimer, I would say that we have a buy recommendation on M&M. It's look bullish, so till it's not now falling below 36.75 levels, I think the stock is heading towards 3900. So auto, as I said, auto, metal, selective oil marketing companies, all of them, Reliance and banking, financials more or less, are into the long build-up category, sectorally. So auto, M&M falls within auto and it's been one of the outperformer. Since the auto rally has started since past 5 years, M&M this has been an outperformer that has gained the market share fundamentally also if you see the turnaround as well as technically and from a derivative perspective. From all angles, this is the one stock which is positive for the short-term point of view. 36.75 Lovisha, till those levels are held, 3900 levels can be seen.
Okay, all right. That's a view coming in for M&M as well and the rest of the auto counters. Let's move on and talk about another viewer query. We have Aisha has been asking the view on BLSE services and which she's asking whether to continue to hold or exit at this particular counter. BLSE services, Jay, any views, any thoughts on the counter? We've seen a good breakout in the end of October.
Yeah, I mean, there could be some bounce back coming in this stock. It cannot be ruled out. A move till 250 cannot be ruled out. And if 180 levels are held, so the risk reward is positive. 1:2 or more than that.
Okay, all right. The risk reward is positive as of now, so a hold recommendation is advisable for the counter. All right, let's take another viewer query. We have Satya who's been asking the view on Vedanta and how the counter looks like on the charts. Of course, we have seen the metal stock rallying so far this year as well. 18% returns coming in for Vedanta as well. Would you suggest to hold on to this counter, Jay, for Vedanta?
Of course, I mean, the results were positive. The metals are doing, as I said, this is one of the sector which I mentioned, right, Lovisha, right at the start when you asked me the market and all of that. So I said that metal is one of the sector which has seen long build up, has been trading in the lifetime highs. So, and Vedanta is also trading near the lifetime highs. If it breaks out from these levels, it will be multi-year breakout. The stock can double also from a long-term perspective. However, from a short-term perspective, I would say till 500 levels are held, 600 levels could be seen.
Okay, all right. 600 levels also could be seen for Vedanta. All right, let's take another stock in focus. That is your Biocon. We did say that the company reported its second quarter results. Revenue has risen by nearly 20% on a year-on-year basis. EBITDA is also up by about 40%, led by higher product volumes. And today also the stock is quite flat, but with a positive bias. Jay, past 1 month the stock has done well. What can we expect next?
Yeah, past 1 month, definitely the stock has done good, Lovisha, no doubt about it. In fact, it has formed a sort of diamond, I repeat, it's a diamond pattern, sort of technically, which it has formed. And the breakout from this stock on the upside will be above the levels of, say, 405, 410. If those levels are broken, I think it can go to 500 plus levels. Otherwise, it will consolidate between 400 and 300.
Okay, all right. 500 levels could be also on the charts then for Biocon. All right, just one last question before we let you go, Jay. What are your top picks at this hour? I know we discussed a range of stocks, but anything that you're liking right now?
Sure, as I said, I'm bullish on the metal pack. So one stock which I would recommend is Nalco. I mean, we have seen a decent or a very good rally in the recent past, but then I think that till the stock is not coming or falling below 240 levels, we can see the stock inching towards positionally towards 350. So that's the call I'm giving. With the stop loss of 240, you can target 350 in Nalco. Tata Steel, as a disclaimer, we have recommended this to our clients. So Tata Steel is also looking positive. Ferrous names are doing good. 170 would be the stop loss. 200 will be the target out there. So these are the two names from metal pack wherein we are bullish. And from the short term point of view, it would be TCS in the near term. I think it's trading around the level of 3082 right now, which at 3400 is what I'm eyeing. If the stock is holding at 2960. So 3400 target near term, that's a trading bet. And Tisco or Tata Steel and Nalco, National Aluminium. These are the two medium term bet, good medium term bet, and this is a short term bet on the long side.
Okay, all right. Metals and a large cap IT name that you have spelled out for us. But yes, so with that, we have to let you go, Jay. But thank you so much for your time and connecting with us.
Thank you. Always a pleasure, Lovisha, to be on your show and looking forward as well. Thank you so much.
Thank you. All right, let's take a quick check of the markets, how we stand as of now. We have cooled off from the day's high levels of where we opened up. But yes, Sensex is still above, up by about 300 points gain. Nifty is above that 25,750 mark, but we have slipped below that 25,800 mark as of now. Barring, we're seeing some weakness emerging in the FMCG pocket. Nifty FMCG is down by about 0.2%. On the other hand, if you look at Nifty Auto Index, flat with a positive bias. Other than that, you can see Nifty IT Index has also been holding on to the gains with about nearly a percent gain. And on the other hand, if you look at the PSU banks, also holding the fort with about 0.8% gain. All in all, the rest of the markets, the rest of the sectoral indices look positive, barring your FMCG index, which is seeing some bit of a sideways momentum as of now. On the other hand, if you look at the broader end of the markets, they have been extending gains, mid caps once again, with about 0.5% gains coming in from the broader end of the market, from the mid cap index. But yes, before I move on to our next guest of the show, let me introduce you once again to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So you can download the Moneycontrol app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Rishi Kohli, Chief Investment Officer of JioBlackRock Asset Management Company, joining us. Rishi, good morning.
Good morning.
Good morning. I mean, we've seen that plenty of the global brokerages have been turning bullish on India. And right now, they're pointing out that Nifty can also reach by about 29,000 by next year itself. So what is your view and how would you relate that?
Yes, I have sort of similar views on the markets, obviously driven by multitude of factors. The first being the earnings, of course, because we've been seeing earning downgrades over the last 4-5 quarters till the recent September quarterly results, and even the previous quarter, where it seems to have bottomed out and starting to have the initial upticks. It is by no means an earnings upgrade cycle. It's too early to say that, but for sure the downgrade cycle seems to be over, and obviously that had started happening at very high starting level valuations. So there was a perfect combination of negatives there, which coincided with the market top in 2024 September October. With these initial signals of the earnings downgrades being over, and the initial September quarterly results that have come out so far being better than expected, the earnings surprises overall. We obviously track more systematic and quantitative metrics at JioBlackRock Mutual Fund. So if I look at that, then they've been more positive earnings surprises than negative on the margin. Overall upgrades are more than downgrades, and the earnings growth expected is slightly higher than what was being thought about earlier. So all of these are positive factors. To combine with that, of course, because India has underperformed the Asia Pac, ex-Japan markets and emerging markets, our valuation premiums, which were at very high levels, again, 12 to 15 months back, are now at, much lower premiums and around the long-term averages. So that also gives it some headroom to sort of move back up. And thirdly, very interestingly, overall emerging market funds, have been underweight India last 1 or 2 years. And the magnitude of underweight compared to the weightage India has in the emerging market index is at one of the highest levels right now at 3.5% almost. So that is very interesting because the moment a little bit of momentum comes into the market, typically those flows on the emerging market funds, overall FPI flows, etc., start coming back in such a scenario. So these are all very positive things that are now coming in, and obviously very positive meaning obviously on the margin it started changing. So I think to come into full steam it will still take a few months, but overall the trend is up now compared to flat to uh, down that it was over the last 12 to 15 months.
Okay. But yes, Rishi, you pointed out that our premium against the emerging markets have cooled off from a year or earlier. But how would you call the valuations at the current juncture? You said that the September quarter has fairly seen more upgrades than downgrades. So can we justify the valuations at the current juncture, given that the street consensus is for double-digit earnings growth for the second half?
Yeah, so valuation, of course, India has always been at slightly higher valuation. So again, looking at it more from 5-year, 10-year averages, we are not that overextended as we were 12 to 15 months back. I wouldn't say it's cheap per se, but then adjusted for growth, if you look at a peg ratio kind of thing for the Indian markets compared to, other choices you have globally, it'll still come across as very attractive. So I think that is the way to look at it rather than just looking at the overall PE numbers.
Okay. Rishi, if you go by the recent Amphi data, there is a drop in active and passive funds for the month of October, despite Nifty rising by about 4%. So how are you expecting the upcoming months to pan out?
So I think that, there is some small blips here and there. There's seasonality in that data. So I wouldn't take it too seriously. I think overall, the trends are healthy only, good only, whatever we are seeing at JioBlackRock Mutual Fund also. I think there's a lot of interest from retail, from digital channels, which is what we are focused on. And that trend seems to be growing only. That is the way I would look at it.
Okay. But from your AMC, I mean, how are you seeing the traction in the mid-cap and small-cap funds? Because the Amphi data pointed out some declines in October. But what would you suggest investors at the current juncture?
No, so we haven't launched the mid and small cap funds yet. Right now, we have some equity index funds, we have some of the cash fixed income funds, and of course, the recent launch of the Flexi Cap fund, which is based on BlackRock's global systematic active equity approach. So the Flexi Cap fund has been seeing good inflows for us. And as I said, the digital and retail channels, which is what we are focused on right now, has been very good. In fact, we've just crossed 2,000 crores on the Flexi Cap fund, and we've been getting flows very regularly on that. So that has been very encouraging. Mid cap, small cap funds, I know the data shows that sort of decline or halt. We don't have those funds right now, but just thinking about the mid cap, small cap sectors overall, I think while the interest in small cap has been higher in recent times because the performance after 2020 obviously has been really, really strong in the small cap space. One has to remember that if you look at the very long term returns, then small cap, mid cap, large cap, it sort of all comes down to the same range. But obviously, small cap, you get the highest volatility, mid cap slightly lower, and large cap even lowest. So one has to remember that if the trailing 4-5 years performance has been an extreme outlier and much higher than averages, then somewhere those averages are going to catch up. So from that angle, I would say large cap, better than mid cap, better than small cap is the way I'm thinking about it, based on whatever data I'm seeing right now. Also, because even on the earnings front, mid cap earnings overall are holding up better than small cap, even over the last year, and even expected growth. If you see average analyst estimates, etc., it looks like the mid cap will be much higher than small cap as well. And then technically also, if you look at the ratio charts of mid cap versus large cap and small cap versus large cap, again, you're getting a similar picture there where mid cap is looking slightly more attractive. So my ranking right now would be more large cap, then mid cap, and then small cap.
Okay, all right, more large cap plays. But Rishi, point us out some of the themes that you have been overweight about after this earnings season.
Yeah, so our model on the FlexiCap side is a systematic and quantitative model. So obviously, Their positions keep changing. We have a weekly rebalancing approach. There's small changes that happen on a weekly basis, 2 to 3% on average. But of course, there is the weekly update that happens, and it is a more a stock specific approach. So it is more bottom up rather than top down. And therefore, overall, it may look like, okay, we are underweight some sector, but then, we'll have some stocks overweight also in that sector, and, some stocks underweight as well, but maybe more stocks underweight, or the ones which are underweight have slightly higher weightage of underweight. So that way, the sector is coming out to be underweight. So from the current funds approach, obviously, the sectors that are overweight, underweight is not really the right way to look at it. It is more stock specific for us. But just my personal view based on other models that we have and other funds that we plan to launch down the line, where sector rotation and factor rotation kind of themes we are looking at. Those kind of things, if I see, then the sectors that are looking the most exciting are banking, financial services, among the best. Metals also, interestingly. Auto, of course, but I think it will be range bound for a few months and then sort of start taking over. But of course, it is looking good as well. These 3, 4 sectors I would look at more from everything aligning from earnings to the tailwinds because of, let's say in auto, for example, the GST cuts and other things. What is looking interesting from a contrarian perspective is the IT sector, because obviously it has underperformed hugely over the last year. There's been a whole host of news, on it over the last year, which has led to a lot of uncertainty in it. Earnings, etc., were also not okay in between. But I think recent, again, results that have come out of the large companies is very encouraging, because there have been, earnings and revenues being better, margins being slightly better, good deal win momentum coming in, even on the large deal side, and even on the AI side, which I think was something which the market was skeptical about as AI impacting some of these companies. But I think some of them have started coming out with some good work in that space as well as deal wins in that space. So all of this is looking good for that sector, and because it's underperformed and beaten down, that I think is an interesting contrarian call, which I've mentioned also a month or two back. But that has started playing out now, I think, in a better way.
Okay. Rishi, I know that you have some exposure to the private lenders, but talk to us about the PSU banks, because they have made a smart comeback in the past 2 months. So how would you suggest investors to go about it?
Yes, so PSU banks, I think, will continue to do well. Again, the earnings and the NIMs, etc., overall on the banking have, sort of turned around after the last 2 years. And within that, I think for the PSU banks also, the same trend is there. So from a fundamental perspective, it looks very interesting. And from a technical perspective, again, there is momentum in that sector. It has broken out to new highs. So I think that is also supporting. So wherever the fundamentals and technicals and some of the other macro things sort of coincide, I've seen that typically those sectors or stocks, the movements are much smoother and much higher probability of, it performing really strongly. So PSU banks is, one of the sectors or subsectors where I think all those things are aligning up very well right now.
Okay. What about staples? I mean, of course, discretionary has been the talk of the town this particular year itself after the GST rate cuts. But staples, we're still seeing some GST-led destocking, and of course, there are some volume growth trends which are quite subdued. So how would you navigate the second half of the fiscal year?
Yes, so that is not really coming up as being very strong, in any of our models. So both quantitatively and technically, it's not coming out as a very interesting sector. I think it will remain a bit subdued compared to the others that I talked about. And of course, there'll be mixed trends. There may be some pockets of stocks that will do okay, but on the whole, not looking very exciting right now.
Okay. Any other pocket where you believe you're a little conservative as of now? Because you did mention IT as a contrarian bet, but other than that, if you had to be underweight on any other sector?
So yeah, overall FMCG for sure. Pharma also quite mixed. So those sectors I would avoid right now. The good sectors I mentioned to you. One thing I forgot to mention was the overall the PSE index. So the public sector enterprises overall. We've discussed about PSU banks. But even other things in that space look interesting right now.
Okay, okay. Let's also talk about defense stocks. I mean, yesterday we did see a strong rally in emerging in majority of the defense pack. But fundamentally, how are you looking at defense theme?
Yeah, so that is again coming mixed in our models. So again, I think there will be pockets which will do well and pockets which will not. Right now, of course, I mean, these stocks and the sector did really well, in 2023-24. And obviously that had to halt because it was running ahead of the fundamentals. So it sort of got subdued. So right now it's more of a relief rally, I would say. Within that, one will have to really go down and look at certain pockets of stocks which are still interesting from a valuation perspective. I think overall, not only for that sector, but overall for the markets, one broad sort of way to look at it and to pick stocks for everyone would be to look at things that are, like I said, you will not get very cheap things very easily, but on a peg basis, things that are, relatively attractive. And then combined with earnings growth and ROEs and margins being good, this combination for any sector, including defense, would be the theme to play basically, so that you avoid stocks that still are overextended and earnings are not coming in, or ROEs or margins are not strong. Because once the market momentum has halted and now it's looking to recover, the combination of fundamentals is what will give you the initial rally, and everything will not rally together. That happens much later in the momentum phase.
Okay, okay, all right. Rishi, we still have the trade deal overhang. So anything that you're watching out from as a near-term trigger for the markets that is yet to be priced in?
No, so I think trade deal thing, of course, the overhang continues. There's no clarity on it right now. It is being widely expected, and therefore, I think it may not have as much impact. So you're right about that. But still, I think the overhang being out of the way will lead to much smoother upward momentum in the markets, given the view is, the markets moving upwards. I think that is the key thing. Other than that, of course, as I said, the initial results that have come of the September quarter looks very encouraging. As that progresses and we get more results out, hopefully that trend continues, and if that does, then it plays it very well into the overall bullish story that is unfolding right now for India.
Okay, okay. All right, just one last question before we let you go, Rishi. I know that you're holding Tata Motors passenger vehicles. Today we'll be having the listing of the commercial vehicles. Anything that you're watching out from there?
No, not really. I mean, we have it more as a benchmark kind of a stock. I mean, obviously in index funds we need to have it, and even in the flexi cap, it is more benchmark plus minus kind of weightages for some stocks like that. So no really strong view about it, and even from a overall compliance perspective, can't really go into too much details on the stocks.
Okay, okay. All right. All right. With that, we have to let you go, Rishi. But thank you so much for your time, and we hope that we connect with you soon.
Thank you. Good to be on it. Thanks.
Thank you. All right, let's take a quick check of the markets of where we stand as of now. Sensex is up by about 500 points. We've extended the gains. Nifty has also been up by about 150 points above that 25,800 mark as of now. So yes, so we are back, and we have climbed back to that 25,800 mark. And Nifty Pharma Index, however, has been exhibiting some sideways momentum. FMCG Index has inched up, but yes, FMCG Index has also been reeling under the pressure. On the other hand, if you look at the Bank Nifty Index, that is also showcasing a gain of about 0.3%. On the other hand, if you look at Nifty IT Index, has also been doing well, quite well in today's trading session. It's been showcasing a gain of about 1% itself. But yes, other than that, you can see all the other PSU banks has been doing well. Metal stocks have been holding up well in the green, and realty stocks have also been holding up well with about 0.5% gains. However, FMCG stocks continue to reel under pressure. 0.1% decline coming in for the Nifty FMCG index. And if you look at the broader end of the markets, holding well stronger and contributing to the overall market's up move as well. Both the mid cap and small cap indices have been up by about more than 0.5% itself. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 p.m. for closing, and we'll understand how the market is developed with our experts. And we'll also be discussing what the stocks have grabbed the headline. Until then, signing off. Do stay tuned to moneycontrol.com.